How's it going, everyone? It's Sam. Have you ever wondered what it took to become a professional trader? What does it take to trade crypto successfully? Today, we're going to be walking through this with a pro trader. He actually works for CoinW, which is a leading exchange that allows you to trade futures and spot markets. But he's going to walk through what he does because he literally just works and that's what he does is trade cryptos. We're going to be going through how much to start with, what you should be looking for, some common mistakes, and all that information. I'll leave links to Dylan underneath the video though, so that you can follow him in the future. If you do want to sign up with CoinW, there's a link underneath the video. You can actually join a trading group for free through Telegram. When you sign up with that link underneath the video, there's a second link to the Telegram group. And he's a pro trader in there, so he does trades every single day. He also mentions that he's willing to talk to people to give them advice and stuff like that on trades and help them walk through trading. Also, they do have a bit of a prize pool right now. They have up to $1 million. You can complete easy tasks to win prizes such as free flights and a 6-night hotel in any destination in Europe, MacBook, iPhone 15, and more. They also have something for free where you can just predict the different 51 euro football matches and win up to $100. And if you correctly predict them, you can get $500. You can predict the top 3 teams. You can win a $50 trade. So it's free. Just check out the link underneath the video. Dylan, thanks so much for coming back on the channel. Today, we're going to talk about trading, and you're the perfect person to talk to about it.
Yeah, thanks again for having me. Can't wait to talk about this topic because I know a lot of people do struggle within trading, and I guess it's also our struggle, and I would love to share my previous experience on how I started and how I got into it. So, yeah.
Fantastic. You're back by popular demand because we just talked a couple days ago about Bitcoin and FOMC and CPI and all that stuff. So we're having you back on the channel. Obviously, you're a pro trader at CoinW. This is what you do for a living. So I'm excited to get you on. Again, there are links to all his socials and how to get in touch with him underneath the video and how you can go copy trade with him. So let's get started. Do you think in 2024, in the year of the bull run, where we're maybe halfway through the bull run, do you think it's possible for someone to make a living trading crypto?
Yeah, I mean, I do think it's possible. Obviously, it will be hard. Like nothing's easy in life. So what is quite nice with CoinW is we do provide you guys. So like we do help you guys with mentorship in terms of signals and market updates, and even like if you DM me, I can help you guys out with potential like one-on-ones. I do that for a lot of people. So how I started to learn from for trading is I actually just watched YouTube. I watched this one streamer for like 2 years. I watched his live stream and I just learned his strategy because what I noticed is when I first started, I literally just combined everything that I learned and it was a little bit too much. And what I realized, if you just keep stuff simple, you literally just keep the chart simple. You don't want too many things happening on the chart, starts confusing you. You literally just keep it simple and make sure that whatever you've drawn on the chart makes sense, right? So I do think that it is possible. I do think that having a mentor helps a lot. I didn't have a mentor, which is why I do like helping people with trading, because I know that in the beginning it can be tough because you're learning too much too fast, and then you don't know what's right, so you start combining things that are wrong. Yeah, it's in the beginning it can be chaos, but it's definitely possible. But we do have all the resources to help out if needed. So yeah.
Cool. Is it better to start this as like a second job or just something that you do in addition to crypto as opposed to like just quitting and being like, oh, I can do this full time right away? Does that make more sense?
I mean, I don't think if you're new to crypto and you're new to trading, I don't think you can just be like, okay, I'm quitting my job. Like
Yeah.
you would have to start part-time first, start getting the hang of it. I mean, a lot of people, I mean, for me, it took me like 2 years to like be profitable. Some people take 6 months, right? Some people takes shorter, some people takes longer. It honestly depends on like you as a person, like your mentality, your discipline, how you manage your money, how you manage your risk. If you're good at that, if you're a disciplined person, if you know, it depends on like how you how you are as a person. And obviously it's hard for anyone to like compare each other. So yeah, I mean, it honestly depends, but I wouldn't just quit my job straight away to go into trading. I'll do it as like a part-time thing. Maybe after work, just do a bit of research, get involved in the community, see what's happening with crypto, start charting your own, watch a few videos. You can do these things every day for 1 to 2 hours a day, and then you'll eventually get it. And it won't take that much effort. But yeah, for that question, no, I don't think you can just go straight away into it unless you do copy trading. But yeah.
Yeah. Is there a certain amount of money you should start with, or a certain amount of your portfolio, or do you just start like with paper money, paper trades, or not actually trading your real money?
Yeah, so for me, personally, I think that trading with real money is better to start with in the beginning. Like what I would say is, like, if you have like $100, right, start with that, because if you use demo money in your mind, it's not real, right? So like if you lose like 100K on a demo account, it's just like, okay, cool, like I don't really care. But if you lose like 10% on your real account, or like 5% on your real account, you start to build like a tolerance to losses and all of these things. So I do think that demo accounts, I wouldn't suggest it, but I mean, if you're starting out first, just start with a small amount of money, but you have to get that feeling of losses are possible within trading. Like it's, no one's going to get 100% win rate, right? So especially if you're not a disciplined person, and you have to take those losses on the chin, and you have to learn how to actually take losses. So I don't think that demo accounts, yeah, I mean, it depends on the person, but for me, it didn't work because I just thought of it as like fake money. I couldn't really get my head around that, that emotional feeling that you have to try ignore when trading. Yeah, but I think $100 is a good start.
Okay. Let's maybe jump into some charts and give us an idea for what the mindset should be. Like, are you just trying to hit home runs? Are you trying to get 1% a trade? Are you revenge trading if you lose some money in a trade? Like, what's the
Yeah.
end goal here with the trade?
Yeah, so let me share my screen here. So honestly, like for me, when trading, right, there's a couple of things you have to start asking yourself, right? So the first thing is, do you want to be a swing trader? Do you want to be a scalper, or do you want to be like yeah, I think there's only really two. But I mean, as a swing trader, it's more for people that don't have the time for part-time. So I think when I first started, I started out being a swing trader, because you don't really have the time to look at the chart every day and to get into the lower time frames. You can kind of just be like, okay, the weekly time frame looking bullish, the weekly time frame is looking bearish, and then you can kind of take a trade based on that, right? But if you start getting involved into the lower time frames, it does get a little bit trickier because um, there's a lot more things you have to think about, right? There's a potential of a liquidity sweep, past your level, whereas on the higher time frames, it's not really as likely because you're using lower leverage. So this trade that I took for ARB, I'll show you why I took the trade. It was over here. We'll go down to the lower time frame. So basically, this was the idea. You can see that we had this massive move to the downside right over here. So this would have been a good level to short from, because this was your previous support, and then you can see that this candle right over here. So this was actually after NFP on last Friday, and you can see that once we close below, this will be a good area to short. But then you can see that for a couple hours or a day after that, we were just consolidating around. And then what I saw was price was kept tapping to the zone. And what I wanted to do is fill this wick over here. So my take profit level was at this wick. And what I like to do is when I'm trading the smaller time frames, I like to keep my stop loss really, really tight, right? Because the thing is, when you're trading these time frames, the possibility of it just flipping bullish, even if the day is bearish, it can still come back up to like these levels right over here. Like it can still come back up here, get a liquidity sweep to the upside, and then come back down. So if you keep your stop loss really tight, what I like to do is I like to keep it above the previous candle wick. So over here, I give myself a little bit of space, because what can happen is this, right? When price comes up to these levels and then we come back down. So for me, you can see that the stop loss is 0.78%, right? So on this trade, I just use the 10x, because a 10x, so you say leverage times your percentage loss. So my percentage loss is 0.78. Then I say that times 10. So that's 7.8%, right? So I already know before I'm in the trade, I know I'm going to lose 7.8% in this trade, but I'm going to gain 20%, right? So for me, that is a good trade, right? I'm going to be gaining, because it's 2%. You can see that the target is 2% here. You times that by 10. So it's 2%, 20%. So I know that the risk to reward in this trade is 1:2.6. It's a good risk to reward. It's a valid setup, and that's how I choose my leverage. Right? If my stop was above here, then I wouldn't be using a 20x leverage. I mean a 10x leverage, because I'd probably use like a 5x or a 3x, because my stop loss is too big and my risk to reward is not good. It's less than 1. So I keep my stop loss really tight when I'm using a higher leverage, because at any given point of time, this can just flip and come back up to a higher levels. Although it's bearish on like the day, it can still come up to other levels. But because of my strategy and what I've been doing for the last couple of years, um, over time, this strategy will make you profitable, and not all the time that you're going to be in the profits. So that is why I do keep my stop loss really tight on the lower time frames.
Okay. If let's well, one question I have is, have you ever estimated your lever or used a certain amount of leverage that when you hit like basically where stop loss would be, it would just liquidate you? Like use your maybe 50% or 100 or 50x or 100x leverage and just use
Yeah.
a smaller amount of collateral. What would stop someone from wanting to do that? And then like you would have more upside. Then obviously if the trade goes your way, you lose about the same amount if it goes the wrong way because you're using maybe a tenth as much collateral, but you're doing 10x the leverage that you would otherwise.
Yeah, you can do that. So like that's a good way of looking at it, because the thing is, like if I use a 50x on this trade, then I would probably just put my stop like just above here, and then I would use less margin, so like collateral,
Mhm.
for that trade. Um, yeah, so for me, like that's a good way of looking at it, but I don't do it that way. For
Okay.
me, I literally just risk every single trade. I risk the same amount.
Okay.
I don't risk more. I don't risk less. So I just risk like 2% of my account balance per trade. Sometimes for swing trading, so like I have 3 different accounts. So I have a scalping account, a swing account, and then the other account is just for copy trading that I do for myself. So basically, the scalping account, I risk 2% per trade, and then the swing account, I risk a little bit more, 5%, because I know that on the swing account, I won't be trading as much, and my stop losses will be a lot higher, but my leverage is lower. So it's more of like in the bull market, I really have to set myself up for a swing account, because I know that yeah, the scalpings, it's all good and stuff, but the swing account, if you catch swings from these lows to a 10x from here, I mean, you're really good for the bull market, and you'll be making a lot more money than just sitting in spot, right? So, and like I said in the previous video that we spoke about, the AI and the real world assets, swinging those coins now and on these potential downsides with like a 2 to 5x, I think it's a really good idea for this next bull market.
Sure. That's what I've done with a lot of my accounts too, because I don't have time to really look at the charts with several different things going on in different businesses. So I've swing accounts when we do seem really bearish, but we're at support. That's when I go in with a 3 to 7x, depending on the asset.
Yes, yeah, exactly. That's my same mentality. Yeah.
Okay, so you you become a trader, you're starting to look at charts. How many charts do you look at? Are you just looking at 50 different cryptos each day? And how many trades are you looking at too?
Yeah, so what I do is the first thing I do in the morning is I come onto crypto bubbles, right? And basically, like 8 a.m. in the morning, I look at crypto bubbles and I see, okay, what are the most moving coins for the day? And I want to look at those coins, because the thing is, trading Bitcoin sometimes I don't really, especially when I'm scalping, right? I can't really get much out of it. Only depending. Well, right now it's a lot more better to trade because of the dominance is so high, but I come into crypto bubbles. I see over here that Uni Rendar's down 10%, WorldCoin, AR. So I'll start looking at those coins, seeing if they're breaking supports, if they're breaking structure, stuff like that, and then I'll mainly just chart those ones. I don't really want to look at a coin that is not really moving for the day. It's just going to waste time, because like sometimes I'll literally go over like 30 to 40 coins to try to find a setup. And what I'll do is I'll go through the coin, do like an overview of the coin, and then I'll just put like an alert over here. And then once price hits my level, then I'll go back to the chart, be like, okay, price is here. I can start looking to take a short or take a long. So basically putting alerts really helps. You don't have to look at the market the whole day, especially when you're scalping. It can be a little bit draining. But once you've gone through a couple coins, you put alerts, and then that's that. You don't have to look at the markets anymore, right? Because you can't control what's going to happen. If you just look at the screen the whole day, it's not like you can control what the market's going to do. So you just put an alert, wait for price to hit the alert, and then that's that. If it doesn't hit, there's always the next day, right? So yeah.
So we kind of went over some of the systems that you have and some risk versus and leverage tips. Let's say you make some money. You get that, or you put the 2% of your portfolio in, you get a 20% return. You do that a few times and it continues to stack up. Do you just continue to keep that in that trading bag and just you take bigger and bigger trades? It's still 2% of the portfolio, but now instead of $200, it's $250. Or do you move that somewhere else?
Yeah, so that's to be honest with you, I do move it to my spot account, because I believe in the spot market, especially in this bull market. Like I do think that whenever I take profits, like if I make, like, let's just say I make a 20% trade, I'll take that 20%, put it in a spot account, and then I'll buy an altcoin that looks good on the day. I'll literally do that every single day, because I do think that there's a lot more profit to be made within the spot market over the next 2 to 3 years. And what's nice is now when I'm scalping, I can literally just make the most of that profit, and then for like the next 2 to 3 years, I'll be way more ahead in terms of like holding, and my bag will be bigger. Right? If the market's coming down, then I'm literally just accumulating at these levels without even knowing. Right? So taking profit every day, putting into spots, DCAing every day, pretty much. It really does help, and it does lower your average cost, because sometimes we have flash crashes, and then that day you're investing on the flash crash, then you're basically investing at a lower price, your DCA goes down. So I think it's a good strategy for this market, because we're really close for massive moves to the upside, and DCAing now within the next one month, 2 months, for the next move is going to be crazy. So yeah, I think it's a good way, and that's how I do it.
Great. Yeah. So you're using this as pretty much an extra income stream to go buy tokens, whether the market's going down or up. In the short term, you're accumulating more, and just putting that in some place that's safe that you don't have to look at all the time.
Exactly.
Yeah. Great. So seems like it's definitely something that people can do, whether it's full time, but even probably more likely, part time. They're doing this. I mean, most of us probably that are watching this channel already are paying attention to the crypto markets when they get home. They're on Twitter, they're on YouTube watching videos. So it doesn't seem like you would. I mean, it's obviously a lot of extra work and stuff that you have to learn, but we already kind of are paying attention to the market.
Yeah. I mean, like what I say, like I said in the last video, it's literally just keep it simple. Like you can see on my chart here, I had like 2 lines, right? I had 2 lines. I knew the market was bearish. Like if you literally just ask yourself questions, like how I used to trade is what I used to look at the market, and I used to ask myself the question, like, what happens if price breaks this level? What is the probability of it coming to the next level? So like you ask yourself these questions, and that's how it helped me. I mean, if keeping really simple does help instead of having 20 different indicators on the chart. Yeah, definitely.
Let's go through just a few common mistakes, and then we can wrap up the video. But I think we've hit on a couple of them, but just so that people can avoid them. Like if they're not even going to follow you, but they just decide to start trying to trade or something like that, like what do they have to avoid?
Yeah. So I mean, the first thing is definitely I think you have to put a stop loss regardless if you don't want to. Because I remember when I first started trading, I was like, no, I don't need to put a stop loss. It's not gonna. And then that mentality is really, really stupid. You have to put a stop loss regardless. And what I would suggest is you make sure that you're calculating your risk every single time. You understand how much you're going to lose on that trade, how much you're going to win, because you can't just go in blindly and be like, okay, it's going to go my way. Like it doesn't. That mentality, you can't do that, and you have to tell yourself like you are wrong. Like not everyone is right, and I think a lot of people find it hard to be wrong when trading. They just expect it to go their way. So stop loss prevents you from losing X amount from your balance, right? I think it's really, really important, and a lot of people just go past it and they start using cross margin, cross accounts, which is, I mean, if you're really good at trading, you can use a cross margin, but I do think that it's really stupid because if you're new to crypto, basically what a cross margin does is you enter a trade, you're looking to go long. If it goes down to minus 100%, it uses equity from your funding account or your futures account and adds to that trade, and keeps adding and eating up your liquidity. I mean your equity in your account, and then eventually, if it keeps going down, it literally you'll lose all your money in your account. So I wouldn't suggest using cross margin when trading, unless you're swinging the market and using a 2x leverage or a 3x leverage, and you understand what's happening. But I mean, some people just kind of don't really know. So I think that first things first, you have to just make sure you understand what's happening on the exchange you're trading on. So you understand what all the functions mean, because there's a few things that can happen, right? You could potentially put the leverage to 50 by mistake, and then you don't put a stop loss in, you don't put a take profit in. So just make sure when you're doing these things, you understand what each function means. Because there are a few buttons like split and merge and isolated and cross, all these different terms that you have to get knowledgeable on that before you enter a trade. That's what I would say is most of. I'm trying to think of some other mistakes, but I think I'll get back to that. Yeah.
So really dial in, don't look at too much, try to stick with one strategy. Don't try to get fancy with different margins and stuff. Just make sure that you understand exactly what you're doing, and then start with a small amount is what I'm hearing.
Yeah, I mean it's literally like if you have $100 in your account, right? I wouldn't risk more than $10 per trade. Obviously it's hard. Like I know it's hard for some people, like they just want to go all in. But if you want to be profitable and you want to understand how risk works, then you can be like, okay, I've turned this $100 into 120 over 1 month, right? So that's 20%, right? If you think about that in your head, 20%. So if you just say, okay, if this was 10K and I'm using the exact same risk management, the exact same thing I did with the 100, you can literally just keep on going up in terms of your equity. Because you're using small amounts, it doesn't mean that you're capped at that level, right? It just means you're practicing for when you're using big amounts, right?
Mhm.
I think that's really important. That's why starting with small amounts is good, getting yourself into the groove of, and basically just using percentages. Don't even look at the profit, like the actual value, right? Look at the percentages. Percentages is what's going to make you a good trader, because if you stick to a certain percentage and you're taking profit at a certain percentage and all of these things, it's better to look at like the $2, the $10 that you made from the trade, because you can scale up from that if you get good at trading. So I think percentages is the way to go.
Awesome. Dylan, thanks so much for coming back on the channel. We'll have to have you here again, probably next month. I think that we've pretty much been doing monthly videos.
Yeah,
So
awesome.
yeah, really appreciate it. I'll leave links to all your stuff underneath too, so people can follow you, can copy trade, can get to know what you're bullish on too, because we haven't really covered specific cryptos that you put in your long-term bag. But
Yeah,
yeah, definitely appreciate you coming back on.
awesome. Yeah, thanks so much again for having me. It's always a pleasure being here.
Yeah, definitely. All right, we will see you in the next video. Again, you can go follow him and check out the CoinW trading group underneath.